Hey, and welcome back to another episode of the Friday Five. We are just about to the end of April, and that means spring is here. And what else does that mean? Spring housing buying market, but more importantly, it's allergy season. As you can hear in my voice, I'm not sick, but every time this year, as my wife reminded me yesterday, I get a scratchy throat, I get congested, and then I sound froggy. So sorry for my funny voice this week. All right, jumping into the Friday Five mortgage rates where we always start. So again, national averages from Mortgage News Daily. VA 30-year fixed at 6.37%, FHA 30-year fixed at 6.35%, conventional 30-year fixed 6.92%, conventional 15-year fixed at 6.3%, and then I added a conventional 7-year 7.6 ARM. Just because I think the ARM pricing is starting to become interesting. That was at 6.45%. But I will say on the rate sheets, if you're willing to pay a point, a lot of those ARM options, the 5 and the 7-year, get into the high 5. So something interesting in looking at. So it was a relatively quiet week for trading. We're slightly worse than we were last week on Friday, but it was Thursday's pricing. Most of that's due to getting clobbered this Monday right after the holiday weekend, and then we actually gained some improvement the rest of the week, but we didn't gain everything that we lost on Monday. Next week, there are a couple big economic reports that come out. Tuesday, we have a job openings report. Wednesday, PCE inflation, and then employment data on Friday. All of those reports have a ability to or capability of moving rates quite a bit depending on how they come in, so stay tuned. Number 2, I get this question from customers somewhat frequently, or I get this comment from customers if I talk to them about buying. Should I wait to buy until I have a bigger down payment? So the short answer on this is it depends. And I know that's not great for social media videos, but it's the truth. It's nuanced, and I'd be happy to speak with anyone about their specific situation, give you my thoughts based on where you're at and what you want to accomplish. But there is a really specific segment of buyers that I want to speak to on this. And this is a segment of people who right now, when they come talk to me and I do a pre-approval, they have enough money for maybe 5 or 10% down, closing costs, and they even have some reserves left. But they're saying to me like, well, should I wait until I have 20% down? And it's not a universal answer, right? Because it does depend. But in my opinion, in general, this is a bad strategy to try to wait till you have 20% down. And here's why. First, it's been super hard over the past couple years to outsave home appreciation. So if you had this strategy 2 or 3 years ago and you said, hey, I have enough for 10% down on a $250,000 house, I'm going to wait till I have 20% down. Well, if you waited 2 years, that house is probably over $300,000 and you didn't save anything by trying to save because home appreciation probably outpaced your saving ability. And then secondarily, right now with credit scores that are really solid, PMI is super cheap. So you're not really saving much by trying to avoid private mortgage insurance. I ran a scenario this morning on a $300,000 purchase with 10% down, 2 borrowers, 780 credit score, and 38% debt to income ratio. The monthly PMI was $29.25. So, from a monthly budgeting perspective, I don't think saving that PMI is going to make a huge dent in your monthly budget. And then the last piece of this, I'm not a CPA, don't pretend to be, so that's my caveat, but there still can be some tax benefits of being a homeowner. If you itemize your deductions, mortgage interest and property taxes are still tax deductible, or at least they were in 2024. Right now, as I mentioned last week, there's a bill in Congress to try to make PMI tax deductible again. Although if it's $30 a month, that's only $360 a year. But anyway, if you continue renting, there's no benefit and you just end up taking a standard deduction. So. And then last piece, if you're waiting for rates to go down, that's a whole different conversation for another Friday Five. Number 3, I had a situation with a customer this week that reminded me that I want to make sure I work with like-minded people, and that sometimes means that not every customer is going to be my customer. In this case, the customer was referred to me, filled out an online application, and I always, that's how we kind of start a lot of times, although I'm happy to do a phone app too or in person. But then I always, if I get an online application, I always go over all of the information on the app, not because I think that people who fill out the app, borrowers, deliberately put the wrong information, but the mortgage industry is unique and nuanced and detailed. So I always go over the details. And with this customer, I asked, how much. It was actually his wife who applied, not him, and he wasn't on the loan, but I wasn't speaking to his wife. I was speaking to him, which makes me a little curious. But I asked how much she makes an hour. She's an hourly employee, and he said $23 to $24. I said, okay, well, can we be more specific? Because, it matters over the course of a year, like what that income calculation comes out to. And he said, just use 24. Well, that makes me uncomfortable because now you gave me a range, and now you're telling me use the highest side of the range. So then I jumped into assets, and I got a lot of the same answers, like, well, just use 15,000. That's what we got. I'll figure out where it is later. And ultimately, he got frustrated that I was trying to be detail-oriented, and frankly, I got frustrated that he wasn't providing me with the information that I need to do my job well, and we kind of agreed that, like, in a polite way, that maybe I wasn't the right person for him. So, in business, in life, I want to be around like-minded people. That doesn't mean I'm narrow-minded, but sometimes, not every customer is the right customer for me, and not every human is, going to be attracted to me in the way I do things either. So, number 4, mortgage industry. Can we please stop selling the fact that you're going to be doing a free refi for someone up front when they are trying to purchase a house? And if you are suckered into that as a sales tactic, please beware. Because in most cases, it's really just a marketing ploy. And if you get a free refi down the road, it's probably going to come with a much higher interest rate than you would have received had you done the not free refi. After 19 years in this business and working for a number of different companies, I know that no one really wants to do loans for free or at a loss. And generally speaking, they want to be profitable on the mortgages that they provide to customers. We want to be competitive, but most mortgage companies are not for profits, and they want to be profitable. So if you utilize a lender because they are doing a purchase loan for you and they promise they'll do some type of free refi down the road, ask them to put it in writing. What does that mean? Are they going to cover just the lender fees for you? Are they going to cover all of the closing costs, including new title insurance fees? Make them put their money where their mouth is and document somehow what they're going to provide to you, because I don't think they're going to provide you anything substantial. And number 5, the quote of the week. This is from a recent podcast I was listening to, Real Estate Insiders Unfiltered, with James Dwiggins and, what's the other guy? Crazy Uncle Keith Robinson. And they had Damon West on, who's a really interesting guy. And in the podcast, he said, don't look for balance in life, look for rhythm. And I thought this was really unique because I'm kind of a guy who's always tried to look for some balance in life. But he said balance is 50-50, and it's super hard to find balance. But you can develop a good rhythm in work, family, hobbies, any other outside interests if you're intentional about it. So I like that. Don't look for balance in life, look for rhythm. Thanks for watching. Hope you have a great weekend. If I can help in any way, please reach out.